How do you know when the market is creating a new high or when that is just a liquidity sweep? I'm going to teach that to you right now before we get started. So that way we make the learning process much easier. So guys, this is the main thing that you need to understand. When a new high is created, you'll see that the candle, the actual body of the candle is closing before the actual body of the candle is closed above the previous candle. And when it's just a liquidity sweep, you'll find that the wick is actually above the previous candle. So sometimes you'll see that a candle comes up and some people mistake that for a new high, and it's really just a liquidity sweep, and then the market continues back down. So now that that is out of the way, I want to show you guys structure. When we're going up, we're creating new highs, and higher lows. This means that the market is continuously taking out the highs prior to the new high. And when it is in downtrend, the market is making lower highs and lower lows, such as this. It's very important to keep that in mind, whether you're on the higher time frame or the smaller time frame. Structure will show you everything that you need to know about what's happening. What's the significance of the highs and the lows? Guys, those are targets for liquidity grabs. Those can also be targets for take profits as well. If you're trading in a downward direction, taking selling opportunities, then you want to target those lows. And if you're trading in the upward direction, then you want to target those highs, right? You can target highs from the monthly time frame, weekly, daily, so forth, right? Target those highs in an uptrend, target the lows in a downtrend. How do you know whether you're targeting highs or lows? How do you know which direction the market is actually going into? Well, guys, I want to talk to you about that daily time frame. This to me is my golden time frame. I mark up the monthly, I mark up the weekly, but the daily time frame is my golden time frame. What's the significance of the daily bias? Well, guys, this tells you what the market is possibly going to be doing, because we don't predict anything, where the market is attracted to for the duration of that trading day. That tells you everything that you need to know, right? When you start your day, when you plan your day, if you day plan, you pretty much know what you're going to do for the day. You pretty much know what to wear based on the weather. You pretty much know the direction based on where where you need to go. And the same for the market. If you could figure out the direction for that day, then you actually are just waiting for opportunity, and you know where to get in and where to take the market to. Now let's go ahead and check out a trade. I think I made about 184 points for this trade, and it was using a sell stop. I actually was on live and I had my chart mapped out, and I actually did show where I was going to enter for a sell on that live. I will continue to go live at night when the market is closed, just so you guys can watch and see, watch those liquidity grabs. During the day, I will need to use the charts. So I may kind of mark up my charts on live. I'm not really sure yet, but let's get back to what's happening here. As you can see on this daily time frame, the market has been climbing up, meaning structure-wise, we've been making higher highs, higher lows. Structure-wise, we've been taking out the previous day's high. Something changed here. If we notice what happened here, let's check it out. Now, this is a question that I asked at the very beginning. How do we know when there's a liquidity grab or a new high? In this case, guys, this is the high of that candle. We did get a closure above the height of this candle here, but something happened, right? This candle set the tone. Now, we're not going to catch every candle. We're not going to catch every day. Sometimes we need to sit back and we need to watch the daily candle do something to give us an indication of what it wants to do, and then we participate. So this daily candle here, it came and it closed above, but it did something very interesting, guys. It made the height of the day, which is up here. This is the height of the day. This is buy side liquidity. And then it came down and it made the low of the day right down here, which is sell side liquidity. Right? So it made the high of the day, it made the low of the day, right? But the question is, where did this candle close? As you can see, after making the high, after coming down, making the low, the candle closed right here. So we'd expect the new candle to open there. Now, this is really interesting. Is this new daily candle going to go for the buy side liquidity or the sell side liquidity? Once again, sometimes we have to sit aside and we have to let the market set the tone for us so that when we come in, we have a clear direction of where we want to take this. So this candle opens right where the previous candle closes, and it's normally always going to happen unless there's a gap, and the gap usually always gets filled. So it opens, it pushes up a little bit. Don't be afraid to move them charts around, guys. Comes up and it pushes up a little bit. That is manipulation. After creating that manipulation, which on the smaller time frame, it looks like a series of candles going in the upward direction, even though it looks like a wick on the daily, a little wick, there's a bunch of candles on that 5-minute time frame going upward. What do you think traders might want to do? Those traders who like to just push that button, they may want to buy the market up. The market then comes down and it tackles that sell side liquidity, which is also the previous day's low. A tone has been set for me. So as I enter the market on the next day, I have a pretty good idea of what I might want to do with the market. Always ask yourself, is the market going to go for the previous day's high or buy side liquidity, or is it going to go for the previous day's low or sell side liquidity? In this case, guys, I was looking to target sell side liquidity. So I felt like I had a clear indication of where the market wants to go. So this is the previous day's high, also buy side liquidity. Okay, cool. I'm just gonna go ahead and put that at the top. And then we're gonna come down to the previous day's low. Okay. Cool. Cool, right? We can do away with this sell side liquidity because it has already happened. Now, let's figure out where this candle closed, right? So this is the height of the candle's day, and this is the low of the candle's day. And let's just go up and see where the candle closed. Okay, so the candle closed right here. This means that I'm expecting the new candle to open here. Do I know how far up it's gonna go? No, I don't. But I do believe that it's going to take out the previous day's high, and then it's going to take out the previous day's low. So that was my idea, to set a sell stop right here. Now, you may say to me, well, if you feel like the market is going down, why would it come up and take out that buy side liquidity? Well, aside from it being a news day, this was a news day, we expect things like that. We expect that manipulation to happen. In this case, there was not a lot of manipulation here, just a little bit of manipulation. But because there's news, I am expecting that we are going to come up and take out the previous day's high. I don't expect any candle closures above this previous day's high. If there's a candle closure above the previous day's high, this means that a new high is being created and we have to change our analysis. But I do expect some wick. And how do you come up with these things, guys? It comes from experience. It comes from going in the charts, checking it out, watching the charts live, even if you're not in a trade, back testing, watching the trades during the news, and you'll notice that sometimes US30, they give us those really big wicks, and then it goes in a true direction. What people do is they start to buy, climb the market up, and then eventually everyone gets stopped out. So in this case, guys, I'm not going to predict how far this market is going to go. I could set a sell stop right up here, but what if it does not go that far? Then that means that I missed out on the trade, and then I have to go in and do some extra work and enter this trade manually. So to be safe, guys, we don't want to be greedy. We just want something. I calculated how many points I can gain, which is 184. That's pretty decent for me. And the idea is that no matter how far up it goes, as long as it doesn't close above, as the market climbs down, I will be entered in for a sell stop. Now, if the market does not come back down, then I'm not entered in this trade. And this means that it's a risk-free setup for me anyway, because trading the news is a little bit risky, although I do love trading the news. So let's just check out what happens here. I'm going to make sure I'm covering everything here. Okay. Cool. Remember, guys, we have news. We're expecting manipulation, meaning the market is going to open and go in the opposite direction of where we want it to go, and eventually come down. And here is our target. In the downtrend, we're using the sell side liquidity as areas for take profit. So here is my take profit, and I'm just gonna let that play out. Market opens, it wicks all the way up there. Guys, it takes out this buy side liquidity. Did I know that it was going to go up that far? It doesn't. Does the candle close above that high, which would indicate a new high has been created? It does not. It simply goes up and wicks. It takes out buy side liquidity from the previous day's high and also a candle from a few days prior to that. It does not close. It wicks, it comes down, it leaves behind some sell side liquidity. As we open for the new day, guys, I am targeting this sell side liquidity, which is the previous candle's low, and that original previous day's candle's low, no matter what. So I was entered in here, and let's take a look at this on the smaller time frame. Let's look at that sell stop. Okay, guys, so here's that sell stop. Here's the sell stop right here. Stop loss being, let's check it out, short. Stop loss being right over here. Take profit being here. And as you can see, we came down. This is a 6.54 to 1. We came down, we came up here. I got tagged in very perfectly. And then it came down. It looks like it took 2 days because the market was kind of playing around here. If you find out you're really close to your TP, you can just go ahead and take your TP. It came back up just a little bit, and then the next day it got me down here. And as you can see, the market is starting to climb up again within this area. But remember, we have closed beneath this previous low. This means that the market is indicating that it still wants to go down. Tomorrow is yet another news day, so I did expect the market to try to climb up ahead of news to get back into premium areas. And if it all goes right, I'll continue to take out these lows. These lows will continue to be my take profit areas. And this is really, really, really simple, guys. Just following the daily bias, just following structure, following where areas of liquidity are, knowing what you want to do, knowing where you want to target, and knowing when to exit and leave. That's the most important part, guys, because I could have sat here and said, I want to target all of the lows beneath there, but it makes no sense to give profit back if you, especially if you know that there's a news day that's coming. You expect the market to try to climb its way back up again and then drop again. So thank you guys for watching, and I hope if you guys would like to join my US30 Bootcamp, it is now on sale. Simply click the link in the description and join the US30 Bootcamp. And if you would like to have access to Sunday mentorship, where we get on Zoom live and we go over the charts together and prepare for the week, the link is also in the description. I'll see you guys on the other side. Thanks for watching.